Yo, what is going on, guys? Bexio back in. Today we've got a brand new video. This time we're recording a little bit different here. My camera's dead, so we're using the webcam and the stream mic and all this different types of stuff. So hopefully it'll turn out good. And I got a new light stuff. I got everything set up to make it as good as possible. So we're just gonna jump into it. You can see on screen right now we've got Delta Airlines, and by the title of the video, you can tell we are looking at stocks that can make you a lot of money and are things to look to maybe invest in, as well as trade here and there. I don't like trading myself because you got to pay taxes on that money. So I would rather invest long term, not pay taxes, and you get those tax breaks and stuff for 1 year plus investing, holding. But we're going to jump into Delta Airlines here. Obviously, part of the recovery sector, they are a stock that has pretty much recovered when you look at the pricing. You can see before this drop, about 58, 59. We'll give them $60. They were around before the big drop, and they're at $42. So not too much more, to go up to be considered recovered. But they have traveling picking up, as well as now traveling turning down. So they might be in a downturn here shortly. The airlines are super hard to tell what's going to happen with them, but they are definitely going to be probably getting a bailout. That's the big thing that everyone's going to be talking about. The bailouts for the airlines, if they need it, I think that they're probably going to get a bailout, and that's why it's still risky, the airlines, but less risky, and why you see Delta. I'm picking Delta because I think they're the biggest one. They're like guaranteed a bailout if they happen. You can see like investor confidence is pretty much back there. They're pushing back towards recovery levels. Traded really low for a while, and then when you look at other airlines like American Airlines depends more on business travel. We might see a switch from business travel to working from home. For there might not be any more traveling or as much traveling for business as there once was. So making money when your main money maker is business traveling, it might be harder, which is why, again, I'm looking at Delta and not American Airlines. So up next, we've got Carnival. This is in the same little sector as Delta, the recovery sector. And when you look at Carnival, you basically see a stock that has been absolutely riddled. This is obviously 23.50 right now. You look back before the drop, $51, almost $52. Even was trending down before COVID, but still over $40. So there's still a lot of room to grow until they're considered recovered. As well as when we move forward, if cases are going down and vaccine comes out and people are going to be taking it and all that, then you might see cruise lines start to pick up. The reason I have cruise lines second, Carnival second, is because there is a chance that they don't make it through. Their bailout chance is smaller than the airline bailout chance because a lot of them aren't headquartered in the U.S. So a lot of them might not even be qualified for bailouts because they're not considered U.S. companies. So might see that happening, which is why they're more risky than the airlines, but there is more upside as well. So you can see, obviously, could double to get back to covered, but it comes with a lot of risk to your portfolio and to your money, and holding them long term comes with even more risk because the longer you hold them and things don't get better, the more money you could lose. So this is both of these companies I don't own any shares in. I did own shares in Carnival at one point, but I sold them. So this is just the recovery sector stuff. Simple things that could really recover and make people a lot of money, but the risk is there with them as well. You can't just go into it and think, this is a guarantee, because it's not. So we'll see what happens with them. If I had to pick between an airline and the cruise lines, I'd probably pick airlines, even though they're burning significant cash. Delta's burn like 14 million a day. I don't know Carnival Cruise Lines burn, but you can see before all this stuff hit, they were making money, still making money here, and then a big drop in money, which actually pretty close burns all of this cash that they made here, as well as losing money again. They'll probably be losing money again in this fourth quarter. So we'll see what happens, but I don't know if the bailout chances for them not very high. So the bankrupt chance is getting worse and worse the longer this goes on. So moving on into another stock that is still the recovery sector, although it is considered fully recovered at this point, is Disney. You can see the $154. They are over what they were for this drop. You can see $144, $145 before the drop. So they're $10 over where they were pre-drop. And the reason I still like Disney, I'm still in Disney, is it's still a recovery stock. So without Disney Plus, Disney as a whole would not be even close to the price they're at right now. So I think Disney Plus saved it, and I got involved in Disney basically right when they hit rock bottom. It was super close to when they hit rock bottom. So they've come a long ways, and I always banked on Disney Plus being huge, and a lot of people not counting Disney Plus when this dropped this far and once they launched it. So I held on to it, and I've made good returns off of Disney, and I plan on holding it for a very long time. So it's not going to go anywhere in my portfolio. But when you look at this as well, the theme parks aren't making Disney money right now. The movies, they're delaying them, not making Disney money right now. The only thing keeping it afloat is Disney Plus and ESPN and those things that they own. But it's making tons of money, Disney Plus. So once the theme parks start reopening and they start bringing in cash again, I think Disney is going to go up very fast because they're just going to be swimming in cash. So I think it's a big deal. Think about Disney in the long term and think about the theme parks reopening, as well as Disney Plus continuing to be their big streaming platform. I think they have like millions, maybe tens of millions of subscribers at this point, and it just is going to be a constant flow of income for them. So I like Disney where they're at. I don't know if I would buy more shares at 154. It's a big risk at 154, but if you have Disney, I would hold it. And if you want to get involved, I mean, we can look at these chart like 5% for the month, 20 or 5% for the week, 20% for the month, 15% for 3 months. So it's been performing extraordinarily well. So if you want to get in Disney, I'd just get in Disney. I think there's a lot of room to run, and it's a good stock. They're a big company. I want when they reinstate their dividend is going to be cool. I think they've got to reinstate it. I mean, they don't have to reinstate it, but I imagine that they're going to because that's they've been paying dividends. They suspended it for when they dropped, but we'll see what happens with Disney and all types of stuff. I definitely think that they are a big stock that could really, really run. So keep an eye on them. And then lastly, this stock is not in the recovery sector, but is in the future of what could be happening. And that is Plug Power, involved in the energy sector. They make batteries and stuff for bigger vehicles like construction type vehicles, forklifts. They make those batteries for those types of vehicles. I don't know what else to call them, but the future, obviously there's been a lot of talk about electric vehicles, about Tesla, getting away from carbon emissions. So if that's going to be going through, Plug I think has insane room to run. I'm involved in Plug as well. I actually bought Plug a long time ago, reading what they were about and what the future is looking like for transportation and electric vehicles, gas powered vehicles, what different states are doing, all this types of stuff. So they do seem like a very good buy. I think that Plug, at this point, it's still a real risky because the stock has been here before and fallen. I think it's different this time because of what the future is looking like and what Plug can do. But Obviously, there's insane risk with this company as well. I mean, they're not a huge company, so they still have a lot of room to grow. And obviously, if EVs take over and electric takes over, or if hydrogen, because that they're hydrogen fuel cells, hydrogen takes over, then they are in a great position to take over. As well as when you look at things like shipping, like trucking, shipping things, the forklifts, construction vehicles, those can't really use electric batteries because for trucking alone, batteries are very heavy. So that would limit how much they can truck because they have to get weighed and all that. Obviously, construction vehicles, they are already heavy right now. Want to make them heavier? That's just going to make it more difficult to do construction and make sure everything's safe. So hydrogen fuel cells are a big idea for that. I think that they've got a big place in the future of trucking and of like construction if things go away from gas power, which would be good because hydrogen fuel cells are very light. They don't need very heavy. Hydrogen itself is a light element, and when you're trucking, you need light because you don't want to go overweight. You could do more. And then obviously construction stuff, just bringing weight down, keeping safety good in construction sites, lifts as well. It's just it seems like a way to go in the future where electric vehicles are seemingly taking over and gas powered stuff is being away from. So guys, that is going to do it. Those are four stocks that I think can make people a lot of money, and that is going to make a big impact in the future. Obviously the recovery stocks carry a lot of risk. The deltas and Carnival Cruise Lines, those carry a ton of risk to your investment and your money because knows what's going to happen. Those are real toss ups. Disney, I'm more confident about. I think Disney is going to be a great company in the future. Going to continue to grow, especially with Disney Plus and theme parks reopening. They've generated more income just their theme. And Plug, I just really like Plug because of what they are doing and what the future could look like. So everything carries its own risk. Do not listen to just my opinion and make your investment based on that. Make sure you do your own due diligence. This is for entertainment purposes, not financial purposes. So do what you want to with your money. And as always, guys, let me know what you think of these stocks, if you're involved in them or think you want to be involved in them and why. And smash that subscribe button. We are on the path to 1,000 subscribers. I'll see you guys in my next video.